Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is October 7th. Silver and gold explorer New Pacific Metals have displayed strong economics out of its recent preliminary economic assessment of the Carangas Project in Bolivia. Moving to Canada, Power Nickel has recently announced high-grade drill results from their polymetallic line zone discovery on the Nisk Deposit in Quebec. Timothy Lee, mining analyst, is here today to discuss further details on the news. Tim, tell us more about Power Nickel's latest discovery.
Hello, and thank you for the warm welcome. This week, New Pacific Metals announced results of a preliminary economic assessment for its Carangas silver, zinc, lead project in Bolivia. New Pacific is NUAG on the TSX. The study contemplates a conventional open-pit mining operation producing zinc and lead concentrates for about 106 million ounces of payable silver, 620 million pounds of zinc, and 382 million pounds of lead over a 16-year mine life. The initial capex is 324 million, with sustaining capex of 128 million over the mine life. All amounts are in US dollars here. Operating costs would be low with an AISC of $7.60 an ounce net of byproduct credits. The average grade is estimated at 63 grams a ton silver, including 83 grams a ton over the first 6 years, with recoveries averaging 87.3% for silver and a strip ratio of 1.7 to 1. Based on $24 an ounce silver, $1.25 a pound zinc, and 95 cents a pound lead, the study yields an after-tax NPV 5% of $501 million, with an IRR of 26% and payback period of 3.2 years. Using $30 an ounce silver, closer to the spot price, the NPV rises significantly to $748 million and the IRR to 34%. While it is a polymetallic project, about 76% of the revenues would come from silver, with 6.6 million ounces average annual payable silver over the mine life, 8.5 million ounces annually over the first 6 years. The study is based on only a 64 million ton subset of the 150 million ton upper silver zone, which is also a subset of the 260 million ton overall resource, if you include the underlying zinc and gold zones. The company stated that it will now focus on permitting for the project before feasibility study work. The company will only start the feasibility study once it has confidence in a favorable and timely permitting outcome, and they anticipate that this will not likely be earlier than the second half of 2025. Now, the project is located in Oruro Department, within 50 kilometers of the border with Chile. The Bolivian government has established the Oruro Mining Task Force, which offers a pathway to transition from an exploration license to a mining license. This would be the first project to do so under Bolivia's 2014 mining code. The Bolivian government currently has a zinc plant under construction in Oruro, and Carangas could provide supply to this plant. In our opinion, this is a positive, robust PEA for Carangas, with a manageable initial capex. We note the project still has significant upside potential from this study, which is only based on about 25% of the overall resource. We also note that this is the company's secondary project after their flagship Silver Sand project, for which they announced a robust pre-feasibility study in June. Shifting to Canada, Power Nickel reported assay results for 3 more holes from the Lion Zone discovery at its 80% owned Nisk project in Quebec. Power Nickel is PNPN on the TSX Venture Exchange. We have a buy rating and a $5 target price. Power Nickel is a Red Cloud investment banking client. 2 of the holes were drilled to test the zone at relatively shallow depths to the west of most of the previously reported holes, while the third hole targeted the zone at depth. The two holes to the west both encountered broad intervals of polymetallic sulfide mineralization, including high-grade, massive portions. Highlights include 6.97% copper equivalent over 32 meters, including 11.94% over 11.4 meters in one hole, and 4.05% copper equivalent over 17 meters in the second hole. The third hole, drilled at depth directly beneath previous drilling, encountered a relatively narrow interval of 4.15% copper equivalent over 1.7 meters. Assays are pending for 4 additional holes, with the 5th currently being drilled. These holes are all step-outs to the west and down plunge. The company plans to begin a 30,000-meter winter drill program on October 15th. In our opinion, these are positive results, with the widest intersections yet from the Lion Zone. The broad intersections demonstrate that the zone has significant expansion potential to the west, where the company is drilling now. While the hole at depth encountered a narrower interval, it nonetheless demonstrates that high-grade mineralization continues into this area of deformation, with the potential for another zone cut off by faulting yet to be discovered. As a result of these broad intervals to the west, we see increased size potential at Lion. And this has led us to raise our target price to $1.05 from 90 cents previously.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to read all the research reports discussed, for all Red Cloud Securities free research reports, and to sign up to our email list. That's it for this episode, and see you next time.